All right, guys, what's going on? Abdel Khawatmi, your favorite mortgage lender. I got here with us the man of the hour, Kevin Perino, Chief Lending Officer, Paramount Residential Mortgage Group. Kevin and I known each other for a long time, actually connected at Leadership Conference. So really wanted to bring him on and, kind of go over a lot of the different things from PRMG, from himself and his experience in the industry. Kevin is definitely always on the road, right? You were just at Total Expert. You were just at a couple different things throughout the was it Mortgage Bankers Association the other day? You were just in Vegas 2 or 3 days ago.
We're going hard here. Well, our saying here at PRMG, built by originators for originators. You are our client, so all of senior management here. We serve you, man. So we have to make sure that you get some love, and I love the fact that you're putting all this content out and really trying to build your community and share ideas and collaborate with your realtor partners and obviously your past clients and future clients. So I'm here to support you, brother. I mean, anything you need, just point and shoot, and I'm all in. So
Awesome.
yeah, but I've been on the road, been a little crazy. At the pandemic, all these trade shows and conferences, they all got pushed back or canceled. And so now everyone wants to cram it all in here in like 60 days. And so I'm going hard on the road. I'm about 8 weeks in. I got one more week to go, and I'm finally going to chill.
Nice. Well, that's awesome. So a couple things, just to start off, PRMG, right? We just hit our 20-year anniversary, which is awesome.
Very cool,
I've been with us 2017, so time flies, right?
Totally.
And I think we've really narrowed down the niche. We're not that type of lender that is throwing multiple branches out there, I think, which has been great. So you want to kind of just give us a little bit of your spiel, because I know on your end, right, you kind of joined PRMG not that long ago. Right. Well, whatever.
Yeah,
long ago in this industry.
It's been 11 years, man. 11 years out of the 20 that the company's been in business. That saying, built by originators for originators. Paul and Robert, our two founders, Paul Rozo and Robert Holliday, they founded the company 20 years ago in September, actually, right around September 11th. And I was in the business in April of that same year in 01. I started at First Magnus in Austin, Texas. And so had my own company after the crash of 08, and First Magnus went down in 07, actually. And I had my own company for about 3 years while Paul and Robert were building this company here. And they had no presence east of the Mississippi. And I, got introduced to them by Herb Lewis and another coworker of his. And I like the way these guys operate. I like how they put you as the client first. And what's interesting is, maybe there's a realtor or a borrower that's listening and they're like, well, I'm the customer, I'm always right. But actually, you as the originator, you're the one that has all the knowledge and the experience. You know better how to take care of a realtor and how to take care of a consumer. You literally know the lending side better than anybody. So if we take care of you, well, then of course, the consumer, the builder, the developer, the realtor, they'll get taken care of at a high level because you're our toughest customer. So man, 20 years PRMG's been in business, and just privately owned. It's got a good culture. We're into building our communities. We never chase like states or technology or the portfolio. We chase people. So you've been with our team, going on 4 or 5 years, and you're there building up our community in the Northeast. And if you weren't there, we wouldn't be there. So we need you.
I appreciate that. No, I mean, I can tell you guys, realtors and clients on the call, the hands-on approach that senior management has, ownership, has been awesome, right? And this industry is obviously consistently changing. A lot of different regulations, a lot of different guidelines in place. COVID, obviously, pandemic threw a curveball at us. Our rates did not change predominantly as to what was there. There was no significant lender overlays or anything of that nature. I think that was a true significance to show us that, we held it down. We hit $1 billion last April for that month, which was awesome. And we're cranking away. And now obviously getting into it, right? Interest rates in the market. So especially someone like you, you're constantly on show host podcasts. You did 2 today, right? I know you said this was your 3rd.
Yeah.
This is probably the question, right, that I think a lot of our clients and realtors are getting asked is, what's going on with interest rates? And so just a little bit from your expert opinion, what do you feel like is coming? What's the avenue of interest rates? I know it's something that we don't really like to talk about as much, but for some of our consumers out there, what's to come?
Well, I would be remiss if I didn't mention our 4th partner, Gary Malice, who's our Chief Strategy and Capital Markets Officer. And one of the reasons why we were able to navigate through the craziness of the pandemic and the CARES Act, and don't want to bore our audience here with all the stuff that went on behind the scenes with margin calls and secondary market collapsing and all the kind of crazy stuff. But Gary and the cap markets team, they shepherded this company through that. And part of what we did is we've been serial savers. We've saved money over time. And when the market changed, we decided to start servicing all of our own loans. And so we've always serviced a good portion, but we went to basically like 95% servicing because the secondary market was in such turmoil. Yeah. And as that stabilized over time, this portfolio, we're over 40,000 units in our portfolio, serving borrowers and communities around the country. We've been able to take advantage because of our experience, the craziness of a volatile market. But now we're, the only volatility right now is, and you're very keen to have this slide up there, is that interest rates and treasury yields are rising. And so that is the general trend. The Fed came out and went overboard with their quantitative easing and their fiscal policy to reflate our recession in our economy. And then they transitioned from, okay, now we're going to talk about tapering back that quantitative easing, that fiscal stimulus. And so in the last meeting in September, they said, okay, we are now going to taper. So in the next meeting coming up in November, everyone's kind of looking for the Fed to say when they're going to taper. Are they going to taper right away? Are they going to taper in December? And so generally, if they're buying less U.S. Treasuries and less mortgage-backed securities, there's less buyers. So the ones that are left, they demand a higher yield when one of the larger buyers, the Fed, exits or tapers off their buying. So Treasury yields will go higher. It's like a house. It's like if there's less supply, then the prices go up. If there's more demand, in less supply, which is what we've seen quite a bit of in housing, you see prices go up. So we're seeing a very similar supply and demand effect happen with mortgage-backed securities. And for those that don't know, you and I, obviously, we like the altruistic part of housing, the American dream, putting someone in a house, making them happy, changing their wealth.
Absolutely.
Multi-generational wealth, like making an impact on their life. That kind of thing is what we enjoy about what we do. But the cold, heartless, and unforgiving side of our business is that all we do is buy and sell money.
Yeah.
So we just buy and sell money, and it's backed by a home and collateral and someone making that mortgage payment. And so mortgage rates are going to rise. There is no crash. There is no bubble. We are historically almost 5 million units short of any prior decade. Between 2010 and 2020, we have 5 million less homes built in that last decade. Coming into this decade, with also a wave of first-time home buyers and demographics that, the people that turn 33 in that household formation range, the number of people that turn 33 each year gets larger and larger for a 9-year stretch. And we got about 4 or 5 years of that left. So there's no bubble, there's no crash. Demand is going to be high. Purchases, if someone wants a house, they're going to buy a house, they're going to pay the going rate. And so, I tell people right now, if you're looking, lock your rate, lock it in now. The prices are going up, the interest rates are going up. There's just nothing. There's no two ways about it for the foreseeable future until we get back to another recessionary environment, which could be, a couple of years from now. We don't know when we're going to see another recession. Look at all the demand out there in the economy. Look at, overwhelming demand. You got ships out there that can't even get to port to get the goods that people have bought. We have inflation because of growth. We have inflation because the economy is growing. Good. That's good inflation. So, I'm telling you, lock your loans, get under contract, and fire away, and enjoy the appreciation in your home.
I love it. Yeah.